Okay, why don't we get started? People can join as we go along. My name is Jeff Schwartz. I'm a partner at Schwartz, Slackus, Reich, Greenberg, Atlas. With me tonight and presenting, I have Sophie Bird and Neil Velsangar. Both are senior vice presidents at IMA. IMA, for those of you who may not know the name, used to be York International, but we're trying to get used to IMA at this point. Tonight's presentation is focusing on what real estate owners, and with a focus on co-ops and condos, can do with respect to the rising cost of insurance. So what the plan is I'm going to give a little brief overview on what we're doing. Sophie and Neil will assist in going through a number of the points that are set up in a PowerPoint presentation, which you'll all see in a few minutes. Neil's going to help us a little bit understand the New York State labor law, which has a big impact on the rising insurance rates. And then we're going to talk about what buildings or real estate owners can do in preparation for renewals and trying to help with keeping their rate increases to a manageable number. I'm sure we've all read the news and seen what's been going on. Before tonight, I pulled out a couple of things that I've read over the years, over the last year, which kind of astonished me, frankly, and quotes that I'm seeing, like buildings were paying or being asked to pay premiums 4 times what they had paid in the prior year, that 20 insurers who they used to get quotes from declined to even quote policies in co-ops and condominiums, that insurance costs are exploding so that they're raising the cost of home ownership and making it hard for some homeowners to sell their units. Insurance premiums increasing by 20, 30, 40, even 100%, according to an analysis done of 1,800 homeowners associations in 44 states. I read something else where there was a survey done of community associations in the metropolitan area, and 91% of those responding said that their insurance premium had increased by more than 25%. So obviously, when that happens, that has a very large impact on common charge fees, on maintenance fees, which in turn, of course, translates into a reduction in value. Higher the common charges, higher the maintenance, the lower in values. So what I'm seeing a couple of our clients do, and have been really intricately involved in a couple recently with IMA's help, trying to address why their premiums were going up and what they can do to limit those increases. Now, why are premiums going up? There are a number of different reasons that I'm sure that we're all familiar about. The number of claims and the increase in costs, or the increase in the payouts on those claims. And as a result of the increase in payout, what's been happening is that umbrella policies were being triggered, where in the past, the first layer of insurance was covering the claims. So the umbrella policies had very high limits, came at cheaper costs. But now, because settlements or judgments are getting so large, and those amounts are passing the first or second layer of insurance, and claimants are getting to the umbrella so that the insureds have to trigger that, that's why the umbrella costs are getting so high. That's why we're seeing a reduction in the number of carriers who are willing to issue policies in New York. And historically, these umbrella policies were being written with very, very high limits at lower costs, and insurers are just not willing to do that anymore. So, that's a little basic understanding of what's happening in the market and what's causing rates to go up so much. So if we could, let's pull up the PowerPoint.
Okay, I skipped right ahead to our agenda, Jeff.
Okay, so let's go to number one first. We could. Oh, we don't need that. That's us. Jeff, Sophie, and Neil. Okay, we just kind of talked a little bit about the state of the insurance market and why we're looking at premiums going up and limits going down. Now
So,
let's go to the next.
do we want to talk a little bit more about each line individually?
Yeah, go ahead, Sophie. You wanted to talk a little bit about that?
Yeah, I'll kick it off. So
Okay.
as Jeff mentioned, you know, insurance premiums are going up on average. Claims-free buildings right now are seeing 20, 30, sometimes 40% increases in their buildings. And it's really, you know, there's multifaceted reasons that that's happening. It's not specific to one line of coverage. It's all lines of coverage, really. So we'll start with the property market right now. So the property coverage is what covers your building itself. So the structure of the building, if there's a fire or water damage, this is the line of coverage that protects you from those claims. And there are many, many reasons that the premiums for your property insurance are going up. You know, one of the most notable things is the aging infrastructure of New York City. You know, if we're talking specifically about New York, these buildings are older buildings. You've got aging pipes, we've got a lot of water damage claims, and then you've got the infrastructure of New York. You know, the drainage system is not sufficient for the heavy rains that we've been getting with climate change, and their carriers are now paying flood losses from drainage systems that are backing up, causing floods where that used to not happen. So, you know, you've got the catastrophic losses, you've got flooding, you've got the infrastructure, you've got issues with new construction. Some of the newer construction buildings don't have pipes that are properly insulated. We've seen many, many water damage claims that go for 7 figures for those types of claims. And then you've also got the conflating influence of just inflation. There are increased costs of construction, labor, materials. It costs more to rebuild your buildings as they stand now than it used to several years ago. So with all of that coming together, property carriers are having to increase the rates that they charge to insure your buildings. Neil or Jeff, do you have anything you want to add before we hop to the next one?
No, that's perfect. Go on to liability.
Sure. So liability, you know, Jeff touched on this as well. That's really being impacted by nuclear verdicts that are coming through for all different types of liability claims. You've got your garden variety slip and fall claim on a sidewalk that 5 to 10 years ago would be settled within the first $1 million of your liability claim. Those are now exhausting policy limits. You know, those aren't going for $25,000 or $50,000 anymore. It's very regular that the full general liability limit of $1 million will go towards those types of slip and fall claims. And then you've also got the influence of New York Labor Law 240 and 241 in New York specifically that, you know, Neil, if you want to talk a little bit more about those laws and what they mean.
Yeah, I'd really like Neil to address that because I know in our discussions with several different brokers, that topic comes up a lot, and a lot of people are pointing to that as one of the major reasons why we're seeing such increases in premiums.
Yeah,
so yeah, Neil, if you would just give us and give everybody a little, you know, blurb on that so that everybody understands, because I often hear the term and sometimes look bewildered at the brokers when they talk about it. So let's discuss that for a minute.
Sure. So a little bit about the history of the labor laws. They were enacted back in the 1800s when New York was going through a construction boom. Essentially, the legislator said, we want to create these sets of laws that would protect construction workers during very difficult or very high-risk activities. So they put these laws into place so that workers would have an avenue for reimbursement in case they got injured on the job. Fast forward, 65 or 70 years, and New York enacted workers' compensation laws to protect workers for injuries at work sites. But what they didn't do at that time was repeal the New York labor laws. So now, around 1995 or 2000, plaintiffs' attorneys learned that there's this loophole where they could file a lawsuit against a general contractor or a property owner and hold them liable for injuries at work sites. So very specifically, there's 3 laws. There's New York Labor Law 200, New York Labor Law 241.6, and New York Labor Law 240.1. Whenever there's an injury on site, more than likely a plaintiff's attorney will allege violations of all three. 200 is simple negligence, essentially, as the GC or the building owner, you're required to provide a safe work site for your for those that are conducting work activities. 241.6, you can consider that. I like to call it New York labor law at the ground level, because it deals with excavation and demolition, and it also requires a violation of the New York Industrial Code in order to trigger that statute. The big one that everyone talks about is 240.1, and that's the scaffold law. That will hold a general contractor or a building owner absolutely liable in the event of a fall from height. So essentially, if a laborer is on a ladder and he's enacted and he's working in certain construction related activities, which could be repair, painting, pointing, sometimes even cleaning, and he falls from height, the building owner and the general contractor will be held absolutely liable, essentially strictly liable for that injury if the worker is able to prove that he meets the prongs of the statute.
I'll just add on to that a little bit, that the labor laws have been so broadly interpreted that it doesn't even have to be a fall from a height anymore. It's really any gravity related incident. So yes, they can fall from the first rung of a ladder. Something can fall and hit them on the head. We've had labor law claims where a contractor was carrying a heavy piece of pane glass that slipped in their hands, gravity, the glass slipped, they dislocated their shoulder. That was deemed a labor law claim, and there was absolute liability on the building for that. So it's been very broadly interpreted, not in the favor of the property owners.
So when we say absolute liability, what are we doing, or what's being done to address that potential liability?
Sure. So the best thing that any building could do is have appropriate contractual risk transfer whenever they're hiring a vendor to come on site to do any work. And by that, I mean making sure that you have an executed contract, and that contract has specific insurance and indemnification requirements holding the contractor liable in the event of a claim arising out of the work.
So by doing that, the building owner is transferring that contractual liability to the GC.
Correct.
Who in turn will have their own insurance.
Yeah. So that's a great point, Jeff. Actually, there's two prongs to ensuring that you're able to effectively transfer the risk. One is having that contract in place and making sure that you're asking for all of the right things, including additional insured status, a waiver of subrogation, making sure that there's a broadly worded indemnification. That's one part of it. The second part is obtaining the contractor's general liability, umbrella, and umbrella policies, and reviewing them, with your attorney or with your broker to make sure that there are no exclusions in there, because the insurance policies are the financial product that's going to pay a claim in the event something goes wrong on a work site.
Okay, so we're going to come back to that and kind of put it in the practical sense and try to give some examples. But Sophie, let's just go back to, is there anything more on the slide you want to talk about on the liability end?
I don't think so. We'll skip to the umbrella.
Yeah, so let's go to the umbrella portion now.
Sure. Okay, so for the umbrella, and again, Jeff, you touched us on this in the introduction, but to talk about the umbrella, I'm going to rewind a little bit and go back to the better years, I'll call them. If we were to go back to 2010 through as recent as 2019, the availability of umbrella limits was much more widely available. There were several risk purchasing group programs that were routinely offering between $25 million and $200 million of coverage for co-ops, condos, rental buildings in the city at very, very low costs, sometimes as low as $30 a unit. You had buildings getting, $200 million of coverage at that low of a cost. So these programs were clearly priced, assuming they would never be triggered. They looked at the claims history in the city, they looked at slip and fall claims, different types of liability losses, and they were all, for the most part, settling within the first $1 million of the general liability policy, because the umbrella doesn't kick in until that $1 million has been exhausted. Once they started paying claims, once these nuclear verdicts started coming through, slip and falls are going for $5 million, labor law claims are going for $25 million, these programs were very quickly underwater, and the carriers that were participating in them started leaving the market as quickly as they could. So the exodus really of markets writing umbrella in New York started as far back as 2019, with risk purchasing groups kind of disappearing over the past 5 years, to the point where we're at now, where there are really only 2 or 3 risk purchasing groups that are still viable in New York State. They are still offering very high limits at reduced prices, but those prices are 3 to 5 times where they were 5 years ago. And the programs have rolled out very strict underwriting requirements with respects to building life safety. So depending on how many stories the building is, depends on how much needs to be sprinklered. Or do you have to have a standpipe system, or do you need a central station building-wide fire alarm? It's very specific, and if you don't check all of their boxes, you will not be eligible for one of those programs. You'll be stuck in the standard market, where you could pay as much as $25,000 for just a $5 million limit. I've got some notes in here about minimum premiums, but that's kind of all I've got for you on umbrella. It's not an easy market right now in New York for umbrella.
Yeah, and I think the whole concept of buildings, we used to see, and we've worked on a few together, where buildings had $100 million of limits, and they wake up on the, right before their renewals coming up, and they're finding that carrier's not available anymore, and there's nowhere near $100 million being offered to them. So now that may be okay, and we can talk about that in a minute. I mean, $100 million on an umbrella, for depending on the size of the building, of course, could be overkill. And that's one of the ways that buildings can save on insurance premiums when they're seeing increased numbers. But convincing owners that their umbrella policy is going to go from 100 million to 20 million, it scares people. So I think, part of the boards, these co-op and condo boards, have to look to educate people, and so that they understand that they were probably overinsured before these, this new policy is coming into effect. And then the other piece, of course, is the D&O policies. And, we're seeing, I think, a limit or a reduction in also the number of carriers who are offering that. I mean, it started to go down years ago, where a lot of the carriers stopped offering D&O coverage. But now a lot of them are leaving the market. A lot of them are reducing the liability caps. And of course, the premiums are going up.
Sure. So, just to tack on to that, I know there's been news recently about directors and officers liability premiums going down. And I just want to point out that that's very much in the public D&O sector. It is not applicable to the not-for-profit co-op and condo boards. Claims, there's more activity in claims in that space, and there's also been significant increases in premium. When you look at the total bottom line premium spend of a building, the D&O is not usually a big line item, fortunately, but those premiums are going up around 20 to 30% for buildings that don't have a claims history. And again, it goes back to the social inflation. These claims settle for a lot more than they used to, and we do have some emerging, new types of claims that are coming through. You do have a lot of ADA claims now. There have been claimants that are known by name in the industry that will go building to building and bring lawsuits against usually the commercial tenant, claiming that the space is not accessible for handicapped people. And then you've also got the emergence of wage and hour claims. So building employees, if they feel that they were wrongfully terminated and do overtime, they can bring lawsuits against the building for not being paid that overtime that they feel that they were due.
Okay, so that's great. And that's kind of just an intro on the state of the insurance market. I just want to say that, to the extent anybody has any questions on what we just talked about presently, you can go into the chat room in the Q&A. I'm watching it. And if you have a question you want to pose, feel free to do so. And, we can take a little bit of time midstream and address questions as they come up. We'll, of course, also have a Q&A period at the end where you can ask questions. So if you want to wait till then, that's fine also. So if you just pull up slides 9 and 10 for a second. I don't know if, Neil, did we miss anything that we wanted to talk about on labor law or not?
I think I'm going to bring up the labor law in the news. I think we should talk a little bit more about I think Neil addressed the laws themselves, but maybe not so much really what's going on in the world right now.
Right.
Yeah. So, obviously these types of claims, scaffold claims, any of the strict liability claims, they've been in the news recently because insurance carriers are now fighting back. An insurance program called Tradesman recently filed a lawsuit against several plaintiffs' attorneys and about 40 physicians and diagnosing centers, alleging that they're essentially committing fraud against the tort system and the workers' comp system. The lawsuit was just filed in March, alleging that that these defendants were in violation of a RICO Act. So essentially, the program manager has um, likened the plaintiff's attorneys to the mob, right? They're saying that there's a conspiracy and they're defrauding the tort system. So we're in the first inning of this litigation right now. It was just filed. However, we are seeing a number of plaintiffs' firms withdraw from certain cases. A well-known firm has actually withdrawn from about 200 to about 250 lawsuits. So those are sort of pending right now without counsel. And ultimately, if no one's substituted in, they'll end up being dismissed. So it's in the news. People are aware of it, and we think that this is hopefully building towards something that could effectively deter these types of claims going forward.
Okay.
I think,
Anything else on the next? Yeah.
I was gonna say, it all sounds kind of scary, so let's maybe get to what people can do to
Yeah,
to protect
so
themselves.
let me just introduce this a little bit, if I could. Let's go
Yeah.
off the
Sure.
the power side. So PowerPoint. So I'm sure many of you, or at least I've seen, and we're all often bewildered by the fact that at a time when your insurance is up for renewal, very often you aren't getting quotes and you aren't hearing about what your your packages are going to look like until 2 days, 3 days, 4 days before it's renewing. And you're really put under the gun and you're forced to make decisions under the gun, which many people like myself don't like. And you'd rather be able to have time to explore options and to have different choices presented to you in a mindful, thoughtful way. But a lot of times that doesn't happen because what's going on, and what I've learned recently, and it's almost like us, the law practice too, the reason you're not getting that is if your policy is renewing on June 30th and you would like to be given options starting on June 15th, the problem, of course, is that carrier or those carriers, they've got June 15th deadlines and they're giving people information on June 13th. So everybody's kind of rollover date floats, and it's really the reason why you're not getting time to consider. I also think, and Neil and Sophie don't have to comment, I also think by putting pressure and less time to decide, people have no choice but to renew, and that's what happens. But what I think a couple of buildings that we've been involved with are doing, based on the fact that they were hit with very large insurance premium adjustments last year, and also changes to their limits, reductions in limits on policies that they have, they've started to try to address and put together packages to present to underwriters to show them that they are properly vetted and that they have a proper risk management system set up within their building in case something does happen. They have all the right documents in place, policies have been renewed, and things have been done so that they're not doing this after the fact or after there's some sort of loss. So what are some of these things? And Sophie and Neil, feel free to comment. One, of course, when the broker or the consultant, like IMA acts, they also act as brokers, we've had them as both, is they're reviewing the history of claims and the loss runs for the building when the building's being up for renewal. And it's really critical that the person who's advocating for you or the company that's advocating for you understands what your claims, past claims, have looked like. Are they still open? What was the cause of the claim? Making sure the broker's communicating the right story. What really happened in this claim? It wasn't something that was a breakdown in the building. So, the broker, people in the past, they just presented their loss runs and let the underwriter look at it and draw their own conclusions. But if the building has had claims, the building should be preparing a narrative of what those claims were, why they arose, how they were hopefully quickly resolved, and present that as part of the package for renewal.
Definitely, Jeff. And just to add on to that, we like to say, you want to make sure your broker is telling the right story to the marketplace. So, if you're a claims-free building, that's wonderful, but the more information the broker can present, what does your alteration agreement look like? What do the hold harmless indemnification agreements look like? What's the vetting process for contractors and vendors coming into the building? It's a very tough market right now. So the better you can present your building, the better off you are, the more markets that will be interested in quoting. And then if you do have a significant loss history, what kind of analysis are they doing? They're a common factor that's been causing water damage claims. Are they working with you to put in place a procedure or, water shutoff valves and monitors to make your building a better risk? And then they can therefore go to the market and say, yes, they've had 5 water damage claims in the past 10 years, but here's what they're doing to prevent that from happening in the future. You want to make sure that they're working with you collaboratively to be able to present your building in the best light to the market.
Right.
Yeah, I'll just add on to that for a second. So that's 100% accurate. What you want to do, and Jeff, you mentioned it earlier, is these underwriters are getting stacks of files this large at 615, at 630, at 71, at whatever. What you want to do is create a package that differentiates yourself from all the other buildings that they're seeing, so that when they get these documents, if it's a contractor, an indemnity agreement, an AIA, whatever, it has all of the right insurance terms in there, so that you're actually showing to the insurance carrier that you're protective of their balance sheet too, right? Because you're asking all of the right questions and all of the right requirements from your contractor.
Right. Okay. So secondly, what I think also has helped in the past, a lot of buildings, when they consider making changes to their, in the case of co-ops, proprietary lease, in the case of condos, bylaws, whether those buildings are setting forth insurance requirements or mandatory insurance requirements for the unit owners or shareholders in the building. And I think that's part of the package too. I think underwriters, from what I understand, are glad to see that the building is enforcing stringent rules with the individuals who live in the building, that they too have their own policies. So of course there is another pocket should something happen. So what we've done and have worked with them is, of course, many buildings have insurance requirements, but a lot don't monitor it. So what is another part of this package, perhaps, is a survey going to the unit owners, finding out how many of them have insurance, finding out what their limits look like, finding out who their carriers are. So as part of the renewal package, you can be saying to the underwriters, we have 100 apartments in this building. 97 of the people in the building who own the 100 apartments have insurance, their own personal insurance, with limits ranging from $1 million to $5 million, with carriers like Chubb or Travelers or wherever they are, to give them some comfort that there are other companies that are insuring in the building. Also, of course, and I'm going to break this down in a minute, but in terms of vendors working in the building, buildings should have standard insurance limits for each of the vendors who step foot in your building. And those limits may vary based on scope of work, how long they're going to be in the building, those types of things. But strict requirements that, again, become part of the package on renewal is something that insurers are interested in seeing. And, really in terms of building-wide things, I like to break it down really in a couple of different areas. And I think this is kind of very practical. You have several different areas where you're going to insist that the vendors working in the building have the appropriate insurance. The easiest one that we all know is when the building itself is performing alterations or repairs. So the building has a contractor that's coming into the building that's going to be doing work or making elevator repairs, for instance. The building is going to have a contract with that elevator company, and that contract is going to lay out, typically we refer to as an AIA contract, but that contract is going to have specific insurance requirements, going to have appropriate indemnification clauses, And the contractor is going to be required to present their insurance information to the building for it, not only to just kind of look at and gloss over, but for your broker who's ever representing the insurance company to review those policies to make sure that they provide what you think they're providing and that they don't have any exclusions that could come back to haunt you. So I know, Neil, we talked about that. If you want to address that a little bit.
Yeah, absolutely. So another point to make, right, is that a CO, a certificate of insurance is not enough. A lot of folks think that they've received a certificate of insurance and it lists out, general liability, auto, whatever, and it has in the description box that the building's an additional insured. It has no legal bearing whatsoever. It's just evidence of insurance. What you really need to do is obtain um, the relevant policies and have your expert consultant, your attorney, whoever, go through them to ensure that there's no endorsements attached to those policies that would preclude coverage. One of the things we actually recommend to a lot of our clients, and I know, Jeff, you do it because I've seen some of your work, is that in the contract itself that you're executing with the vendor, you specifically say the policies that you're procuring cannot include any exclusions with respect to New York labor law, gravity related injuries, height related restrictions, anything like that, so that there's no tricky exclusions or endorsements in that policy that will preclude coverage when a claim comes in.
Yeah, that's become quite common these days. I know it's a little bit newer than what we were doing in the past. So yeah, we've been doing that. So yeah, I mean, I think that these guys or whoever you use reviewing the policies and getting the actual policies is really, really important. I've
Critical.
seen a number of vendors really get rejected because the insurance policies that they've provided are just not what the experts are looking for. So, and it's obviously become a tougher market, and it might limit the vendors who can perform work in your building.
Yeah, and while it is, an administrative burden, ultimately, it'll help you avoid a claim, and it'll help the balance sheet of your building by not having to pay a claim because you've vetted the contractor's insurance.
And also vetted the contractor too. I mean, we've got,
100%.
obviously, I think it goes without saying, but really you're kind of checking out the contractor. It's great when you can use a very well-known contractor, but when someone comes in with a lower bid and maybe they're not as well-known as some of the other big ones, vetting them, making sure they're not involved in any lawsuits, getting references and checking their insurance. Because a lot of times those companies don't have the types of insurance that we would want to see them have. So that's for the bigger kind of alteration where the vendor's coming into the building and doing a building-wide capital improvement or repair. We all know that there are other smaller things where some of these things are just not practical. So going from kind of the least intrusive to the most intrusive, the least intrusive, of course, some vendors just coming to the building and they're delivering a piece of furniture. And all they're doing is coming into the building, they're taking the service elevator up to the 9th floor, and they're dropping the couch in the apartment. A lot of people would say, well, you got to get the delivery person to sign an indemnification agreement. And, they've got to, of course, provide insurance, which they do. But in most cases, it's probably unreasonable to think that a vendor who's delivering one item to the building is going to sign an indemnification agreement. So what we've done is we've designed a delivery agreement, and that agreement is between the co-op or the condo and the owner. The owner contacts management, says to management, we're having a couch delivered on Tuesday. Management sends them a very simple agreement that says, okay, you're letting your delivery person come into the building. You're agreeing to indemnify the building in case anything goes wrong. And all of this is only between the building and the shareholder or unit owner. In terms of the delivery person, we're also asking, right, guys, for their insurance as well. There is a little hole here, right? Because we get their insurance, but we don't have a written agreement with them directly between the co-op and condominium and the vendor. Can you just address that for a minute, one of you guys?
Sure, I'll point out, Jeff, that for deliveries and things like that, fortunately, those types of people and vendors don't fall under the purview of New York labor law, so you don't have the same issues with the absolute liability and, the limited defense. But yeah, definitely, you always want to get for any vendor a certificate of insurance, just showing that they have proof of general liability, perhaps an umbrella, workers' compensation. These people are ultimately on the job. It is their workers' comp coverage that should pay for injuries for, things that happen on the job.
Okay, so then, so that's kind of the low on the scale. The next one is the, of course, a lot of people refer as the decorators agreement or the minor work agreement. And that's the situation where somebody's coming into the building, and I think you do include this, they're delivering a stove and they have to mess with the gas pipe. They're doing a paint job, wallpaper, very unobtrusive stuff, but they're still going to be on ladders, going to be touching pipes, going to be touching gas lines, those type of things. I think the buildings should be insisting that the vendors sign an agreement. And it doesn't have to be, the Magna Carta. It can be a very short, we put together a very short 3-page agreement with the help of IMA and others. And that has the right info that has the right requirements for both the owner or shareholder and the contractor. Both have to be parties. And it's critically important that in this case, the contractor be a party, because if the contractor is not a party and they have no contractual obligation to supply insurance, insuring the co-op or condo, there's a big question mark whether or not, if there's a claim, that insurance will cover the co-op or condo. So the kind of moderate agreement, I won't call it a full alteration agreement, has all the stuff that you want to see in there. Obviously, the indemnification agreement from both the owner and the contractor agreeing to provide insurance, the contractor providing the policies, maybe, for the broker to review in advance. And of course, proper supervision and knowing, when they're going to be there and complying with the rules of the building. And then the last thing, of course, is the most intrusive is when there's a full alteration going on in the apartment by the shareholder or the unit owner. That's going to require, as many of you know, the submission of plans, specifications, appropriate permits, an actual alteration agreement, which is much longer than the 2 or 3-page document I'm talking about before, and the vetting of the contractor, and that contractor providing the actual insurance policies to be reviewed with the appropriate limits in there.
Absolutely. And I'll just add, Jeff, especially for the alteration agreements, when you're working on a larger project, really broadcasting to all the shareholders or the unit owners in the building the importance of choosing contractors with the right insurance and getting an insurance professional involved sooner rather than later. Involve them in your vetting process. The biggest headaches that we get from shareholders and unit owners is when they've picked a contractor, they've signed the contract, they're ready to go. Then they send us their insurance policies and we say, we can't recommend that this contractor be allowed to work in the building because of the insurance they have. So the sooner you get an insurance professional involved in reviewing the policies, vetting them, making sure they don't have any of these exclusions, the better. So you don't get that far down the line, you're ready to go, and then the building and management tells you, no, you can't work with that vendor.
Yeah, I'll also say, even if it's not, like Jeff mentioned, one of those full-blown renovations with some level of construction, if someone's getting on a ladder, you do have the risk of, at the very least, being named in a lawsuit alleging a violation of New York labor law. So you'll still have to defend the case, even if that individual doesn't fall under, 240, 241, or 200.
Okay, so those are kind of the main those are the main, areas that we see this. And I think, we talk about it here, but as part of the package for renewal, putting this all in writing and showing that there is this contractual risk transfer plan and a proper procedure for each type of thing going on in the building, and demonstrating that to the underwriter that is in place is definitely useful in getting a policy renewed at what I'll call not an unconscionable increase. So let me pause here just for a minute and see, does anybody have any questions on any of that they want to shove in the, oh. For a relatively small co-op, they often want to avoid extensive legal and expert fees, such as vetting the insurance policies of vendors. In general, can you depend on the co-op's insurance agent in reviewing these policies?
I would say in general, yes, that is a service that the insurance broker for the building should be providing. I'd say at least 50, maybe 75% of my day is doing just this and reviewing contractor policies for contractors that are working for the building or in a shareholder or unit owner's apartment. Neil can speak to that too. He spends a lot of time reviewing the alteration agreements. It is definitely a service that the broker should be providing to the building.
Yeah, so someone with that level.
I would say most brokers, not all brokers.
They should be providing it. And, usually they don't charge a fee. That's a service that you get by choosing them as your broker.
Yeah, I was just gonna add, brokers with a certain level of expertise will also be able to review, a 300-page policy, and not have to read the entire thing. They can pick out the endorsements that would give rise to an exclusion that could preclude coverage. So that they have a level of expertise that will sort of narrow the amount of time that they need to spend looking through those documents.
Okay, let's talk about, I don't know, Sophie, let's pull up the PowerPoint just for a minute.
Sure. So I know we went kind of through all of this, the contractual transfer, reviewing the alteration agreements.
Just go back one slide for a minute. I want to just note, all these specific insurance forms like the Accord 25, 855, and all these kind of special little numbers and things are all things people should be sensitive to in drawing up their contracts. Because very often you have somebody who you're dealing with, whether it's an adjuster or somebody else, if a claim comes in, they have a checklist. Well, where's the 25? Where's the 855? So all these numbers, they're kind of out there, but they are important to having these contracts. Go ahead. Right, so these are just things, I guess, that we didn't, what can be done to keep premiums down, increasing deductibles, of course, taking away coverage that may not be needed, although most people would kind of hesitate to take away water damage and flood insurance. The construction exclusion language, I'm not sure what that is.
So this was more so, Jeff, what you can do. So the bullet point here is kind of, when all else fails, you want to make sure that the insurance you are buying for the co-op or condo association doesn't have these types of exclusions in it, right? Because you want at the end of the day, if the risk transfer doesn't work, if the contractor has a labor law exclusion on the policy, you want to make sure that you're being defended by your own insurance policy. It's last resort, you definitely want to transfer that risk and have somebody else's policy pay for your claim whenever you can. But you do want to make sure that your broker is thoroughly reviewing the terms and conditions, the forms and endorsements that are on your own policies. So just be wary. We're in a very hard market right now. Premiums are going up, but another way that it's kind of the hidden way that insurance carriers are putting more on your plate is by making some of these changes to your policy. So a lot of carriers are increasing your deductibles. So you're self-insuring for more of your claim. A lot of them are stripping back coverages. They might add a specific water damage deductible. They might remove water damage coverage if you've had significant water damage claims. And then the big one, if you've had a labor law claim or labor law claims, or you have significant work going on in the building, you're having local law 11 facade work done, having a major lobby renovation, carriers are aware that those activities are going on, they might look to restrict the coverage they provide for construction activities. So you just want to be super, hyper aware of the actual terms and conditions on the policies that you're getting for your building at time of renewal.
Yeah, because I know one thing I'm hearing also, there are hurricane deductibles that are changing or that there used to be the lesser of one or two things, and now they're removing that. So there's definitely things that are being done kind of and slipped into these policies that people don't know about that you certainly have to watch out for. I mean, the other thing too, I think in terms of other steps, you know, buildings are often faced with this. I'm just wondering if you guys have any views on this, you know, when to report a claim. If a claim happens and, you know, it's relatively either minor, whether it's below the deductible and it's uncertain, how do you make that decision whether to report it or not? And what kind of goes into that analysis?
Sure.
You know, what do you think about that?
It's different depending on what type of claim, right? So if you have an incident that could give rise to a liability claim, you know, someone tripped and fell on the sidewalk or fell down the stairs or was injured in the elevator, that's something you should always report to the carrier. You can report it for record purposes only, but it allows them to go out and do an investigation. They can take photos of the sidewalk. You can save security footage. That way, if a summons and complaint does come 6 months, a year later, you have records of, you know, what the building looked at that time. It helps with your defense.
But is mere reporting going to trigger increases in premiums? That's what people mostly worry about.
Not if you report for record purposes. It just allows them to start building their file. If there's no summons and complaint that comes, they'll close it out, nothing paid. You know, so that really doesn't have an impact. Where you really want to rely on your broker, your consultant, for their input is if you have a property claim. So if you have, you know, water damage, or if there's a small fire where the damage is minimal, do you want to report that claim? You can't report a property claim for record purposes only. Once you report a property claim, the carrier is going to assign an adjuster. They're going to go out, they're going to do an investigation. You're going to start accruing expenses on that claim on your loss run. You can then withdraw the claim at a later date, but it will always sit there. And anybody looking at your building will say, you know, or see they had a water damage issue, they had a small fire. They're going to see that in your loss history. So, you know, we've really been advising our clients, if something is close to your deductible, a couple $1,000s over in today's market, it's not worth reporting. It's not worth reporting a claim to get a check for $2,000, $3,000, $5,000 for that, you know, black mark to sit on your history, because carriers do look at a minimum usually of 5 years of loss runs. So if you do have claims, they're with you for 5 years. Some carriers are now asking for 7 to 10 years of loss run. So it could stick with you for even longer.
So there really is a big difference between liability claims and property damage claims and the decision whether to report or not.
Absolutely.
Yeah. I would also say on the liability side, right? If you do have it, I'll just call it an incident, not necessarily a claim, and you do report it to your insurance carrier. Typically, if a formal claim doesn't come in, whether that's a lawsuit or what's called a letter of rep from a plaintiff's attorney, that insurance carrier will often close the claim down within 60 to 90 days. So it'll be listed as a closed claim on your loss run.
And then the other thing I think, you know, that's important too is just kind of in the co-op and condo world is a review of underlying documents. A lot of times claims adjusters come out and they look at claims and they go right to the condominium's bylaws or the co-op's proprietary lease, and they see language that either gives them an out or limits their coverage or says they don't have to cover something. And it's probably useful, especially in older buildings, to just check bylaws and condo proprietary leases and just make sure that the appropriate provisions are there and nothing in there is going to limit the ability of the building to recover when a claim is submitted. Okay.
Yeah, definitely. And I think that speaks to, Jeff, the importance of all unit owners and shareholders carrying their own insurance, even if it's not mandated by the building documents, right? And really reviewing those documents for whatever building you live in. You want to know what you are responsible for. More often than not, the building's responsible for what they call it original specs. So however the building was, whatever was in that unit on the date of recordation. So when the building became a co-op and a condo, which can be quite a long time ago for a lot of the buildings in the city. Any improvements and betterments, additions, alterations made within the four walls of that unit typically fall, you know, they are typically the responsibility of the unit owner or shareholder to be insuring on their own homeowner's policy. And those governing documents are what the adjusters look at both on the building side and the homeowner's insurance side to determine which one of them is responsible for paying for what within the four walls of that unit.
Okay, going to take a quick pause here again and see, we got another question came up. If no claim is submitted because potential payout is somewhat close to the deductible amount, who pays the claim? The building owner.
Yeah, the building pays the claim.
Yeah.
So again, you're gonna look to the governing documents. If it's a co-op, it would be the proprietary lease. If it's a condo, you're looking at the bylaws. So if it's damages 100% to common areas, the building's gonna fund that claim.
Another claim, in the absence of a separate agreement with the vendor, what insurance documents can give the co-op a degree of certainty that at least the vendor's policy will cover the co-op as an additional insured?
So I'd say that really the only thing that you can get outside of a signed hold harmless indemnification agreement is a physical endorsement to their insurance policy listing your building as an additional insured. More often than not, these contractor policies have blanket additional insured endorsements that say we'll provide anyone with additional insured status as long as it's in a contract that's signed before the date of the loss. So really, you need that extra agreement. They could have the best insurance in the world. Without a contractual obligation to provide you with additional insured status, they're not going to do it.
Yeah, and there was a case that came down many years ago, right on point. There was no contractual obligation of the contractor to provide insurance to the co-op. They delivered a certificate and the co-op thought it was an additional insured, but because no contractual obligation existed to have insurance in the co-op's favor, the insurance policy didn't help the co-op at all. So it's absolutely critical.
Yep.
I got another question. Where
And it can be a
from?
one-page hold harmless, right? You can do it in one page. You don't necessarily need to have a 15-page document.
Yeah,
well, I think it's a little more than hold harmless though, Neil. Isn't it both a hold harmless and a commitment to provide the insurance?
Correct. So that's absolutely right. So what we want to see, it's sort of two parts, right? We want to see an insurance section that has a listing of the insurance that the vendor has to procure. So that's GL, umbrella, auto, workers' comp. And in there, it would say that the building is going to be an additional insured on a primary, non-contributory basis. And then the second part would be, the sister to the additional insured status is an indemnification that would say that the vendor has to hold the building harmless in the event of a claim.
And then this last question, Jeff, I think was a tack on. So if the building doesn't submit a claim through insurance, where does the money come from? Either the operating account or your reserve fund. The building's funds is what would pay for that claim.
Yeah. Yeah. Okay. Anybody else have any additional questions? Okay, so I think we had planned to go to about 8. So I want to thank everyone for joining. Sophie and Neil, pleasure.
Thanks for having us, Jeff.
Thank you.
Yeah. And if anybody on the call, on the webinar has any additional questions, they can feel free to call any of us. And I appreciate everybody joining. Have a good night.
Good night. Thank you.
Well,
All right, bye-bye.
night.